Welcome back to the Dividend Diplomats YouTube channel, guys. You got Bertha, Hurt, and Lanny, your favorite dividend investors out here on all of social media, guys. And today we're going to talk about a monster dividend growth stock, a stock that explodes their dividend and also rockets up their share price, a stock that we talked about just once within the last
Mm,
few months, but we're bringing it back to the table because they dropped about 10% in the last few weeks.
let's go. Smash that subscribe button. Give this video thumbs up here. Let's go, everybody. Come on. We love talking about dividend stocks. If you can't tell, it's our favorite topic. We can't get enough of it. Subscribe. Join us on our journey to financial freedom.
Trucks. We're getting into big trucks, big industrial vehicles that, again, go from
Ooh.
coast to coast. We're not talking monster trucks, but we're talking big trailer trucks that are shipping your goods and services all across the country here, right, Bert?
Yeah, I thought you were talking Shane O'Mac when you were talking coast to coast there, Lanny.
Coast to coast. Here comes the money.
Yeah, chances are though, you're absolutely right. You drive on the highway, you see them. You're driving even on the suburbs. They're driving right there next to you as that semi is pulling up next year. This company, before last time we talked about them, I didn't know who they were, but you bet that I've been following them ever since because it's a company that just makes sense when you talk about their business, and especially as you start peeling back the numbers, which we're going to do in today's video.
Yep. So big commercial truck maker here, guys. You're talking your Kenworth, your Peterbilts, you name it. We're talking PACCAR, ticker symbol PCAR, guys. And if I look at their stock price, I went to their 1 month chart and they are actually down 10% in the last 1 month.
Hmm.
They were climbing back to that $110 per share mark recently, but now they have taken quite a little bit of a fall. The reason is because this stock's up 113% in the last 5 years, crushing the S&P 500, but they're down
Good
this
for you.
year, guys. So we might have a nice ripe opportunity when we get into the metrics of what we're going to get here, guys.
Yeah.
But Bert, we did throw in some financials as well. We could talk about the revenue, income, margin, shares, and debt here.
Let's do that. And what we've been doing is we've looked at that 5 year growth for each of the metrics here. So where were they at the end of 2019? Where are they now at the end of 2023, their last annual fiscal year result? Revenue has been interesting. In 2019, it was about 25.6 billion. Now it's 35.1 billion. That's an average growth rate of 7.44% every single year.
Yeah, gotta like that, average growth rate there, guys. But the net income is where it gets even better. They went from 2.4 billion to 4.6 billion, an 18.5% growth rate on that net income. And Bert, there's one real reason why the net income has just kept growing.
Because they are making the most of that margin. They're playing fantastic defense on their costs there. 2019, their margin was 9.33%. 2023, that margin is 13.1%. So they've grown revenue and they've been able to greatly grow net income because they are able to control those costs, manage frugally, and make sure that they're making the most of every single dollar they're plowing right back into the business.
Yeah. And similarly, guys, the shares have maintained, kind of grew a little bit actually in shares outstanding. The long-term debt is also down about 8% from
Beautiful.
2019. So you'd love to see the long-term debt, the non-current portion decrease here.
Beautiful.
And I took a peek, Bird, at their last quarter earnings release that came out back in July actually. Now their net sales and revenue for the quarter it was about 8.3 billion, which is actually down from prior year. Now, some of their costs and all of that were also down, but not down enough to make up for it. But that's okay. I mean, they still crushed it from a earnings per share and all of that standpoint. So, again, I think they really slid probably on forward-looking guidance on that revenue front.
Yeah. Hey, I mean, still crushing it. I think that's exactly what you said. We see that with a lot of companies. You see the bad headline that says guidance is down, companies slowing down. But when you actually look at the numbers, you still see extremely strong revenue growth, extremely strong earnings. And that's what you're seeing here. So that's why we might have a buying opportunity in our hands. Again, as you said, it is down 10% over the last month. That has basically brought it to even over year to date, and it's only down 4% year to date. So could it be a buying opportunity?
Glad to see it down, guys. So let's get into the metrics here. Again, share prices are as of August 9th. Filming is here on August 11th, Sunday night. $92.86. Those analysts are expecting $8.07 in earnings, but they actually, again, I love it. That's their expectations. They've already earned $4.41
Hmm.
through, 6 months. So they're only expecting eight, but they're way more than 50%. But we're gonna go with 807 to be conservative here.
I'm out of the block firing. They get a
Yeah,
strong start off the block.
11.5 is their price to earnings right now, which it could be lower, but we'll keep it at 11.5.
Yeah, their annual dividend is $1.20. That gives you an so low payout ratio of 14%. Yeah,
Now,
that's the fun
what's
thing. But
yeah, that's
that's not
but
all,
but
Andy.
yeah,
That's not
but
all you get.
what do they do with their dividend though?
We tried to sneak one past you here, everybody. We only factor in their regular dividend when we calculate a payout ratio because a special dividend is never guaranteed. But if you're a Picard shareholder, you bet your you know what that you want that special dividend, and that is absolutely factored into your investment decision. And they pay it out pretty regularly every single year. As I slide through their dividend history, I see
Little
special
Christmas
dividends
bonus,
there.
Corey.
Yeah, it's a beaut, Clark. It's a beaut, and it's not just a small special dividend now, is it, Lanny?
No, it's usually pretty massive, paid around either the end of the year or January of the following year, guys. Last year's was $3.20. The year before that, $2.80. The year before that, $1.50.
So you're at least doubling up your annual dividend with that special dividend at the end of the year.
Yeah, yeah. So that yield may look small, but it's actually larger. It's bigger, but smaller, as they would say with the Apple product release.
Love it.
But that skews their growth. Their growth history is a lot longer than 3 years, but every site's just going to say 3 years because of that special dividend. And I was too lazy to go back all the years to take out the special dividend and
Yeah, no,
figure out what their
it's
actual
not worth
stream
it. It's
is.
important. That dividend streak's going up, and that's all that matters for Pat Carr.
Right.
I can't remember. I think last time everyone told us it was Pat Carr.
Pack car guys.
It was Pacific something. All right, please proceed. What's the yield?
But the yield's only 1.29% without the special dividend. Again, let's just say they don't get 320 this year. Let's say they only do a buck 60. That yield goes up to 3%. So if they
Mhm.
get half of their special dividend from last year, which maybe it's probably going to be higher, but even with half, the yield shoots up to 3%. So keep that in mind.
That's right there. So it's interesting. It's interesting metrics. They're
I love
five.
this stock, man. Dang it.
Yeah, their 5-year average yield is hard to compare the margin for this reason here. Their 5-year average yield is 3.53%, which seems like all these aggregator sites are factoring in that special dividend that comes along
Oh,
with it.
yeah, 1,000% they are. No doubt that they are.
So
And again, I would have to go back through every stock price every day for the
no,
last
we're not.
5 years.
No,
Take
no. No, if you get this video to 1,000 likes, maybe Lanny will do another one where he goes back and does it a third time. Show us you
yeah,
want us
yeah.
to.
The account number three, you'll see me just take that wooden bat to my leg like Ben Affleck
Yeah.
does. Um, but guys, those are the metrics. Under 12, under 20, under 12 PE, under 15% payout ratio, which again, payout ratio gets up a little bit after that special dividend. Um, Huge dividend growth rate, yield 1.29% without the special, well over three, possibly well over four, possibly, percent with the special dividend here, guys. Um,
Sure.
I like the stock. I would love to exit maybe a few stacks before I just start a new one. It's frustrating, or I might just buy the stock and then any proceeds that I end up exiting from whether it's Warner Brothers or Paramount or Intel, to just move it into PCAR.
Yeah, that's not a bad idea at all. It's looking like a great price, great value, great yield. All the metrics are looking fantastic. Easy to see this one shooting back up the watch list. And you know what, Lanny? I know you were kicking yourself in the last time that you didn't buy it. Sometimes, um, it's good to get a second chance at it.
Yeah, so you're saying there's a chance. What do you guys think of Pack Car? Is this a stock to buy right now? Is this Is this too cheap to ignore for Pat Carr? Let us know in those comments below.
If you haven't already, subscribe to the channel. Give this video a thumbs up. And Lanny, what do we need to tell all those diplomaniacs out there?
If you're not with us, you're against us, Jack. That was Bert, not Hurt, and Lanny from the Dividend Diplomats. Over and out.